Client calls me up. He says, "Hey, I'm a financial advisor. I've made roughly 75 to 100K the last 3 years. Now my clientele is built up and I'm on track to make 150K this year. Do you think I need to run my business through an entity?" And I said, "Yeah, I think you should have done that a couple of years ago. But here's why I recommended an S-Corp for him." So with an S-Corp, instead of having to pay self-employment taxes on the entire $150,000 he's going to make this year, what he can do is pay himself a reasonable salary. Let's just call it $80,000. That $80,000 will be subject to Social Security and Medicare tax, but the $70,000 will not be subject to that. As it is right now, if you're reporting the entire 150K on a Schedule C on your personal tax return, you're paying Social Security and Medicare tax on the entire amount. So we're going to almost cut that in half. Yes, you will lose out a bit on your QBI deduction, but the savings in self employment tax will outweigh the loss of your QBI deduction. There's a couple other factors to consider. With an S Corp, you have several additional opportunities to save on taxes, such as Section 280A, as well as having an accountable reimbursement plan. The moral of the story is if you are going to make more than roughly 50K in 1099 self employment income, small business income, whatever you want to call it, if you're going to make more than 50K net profit, you should probably figure out whether an S Corp makes sense for you so you could save on self employment tax and potentially deploy some additional strategies. You got to create a tax plan. Hey, my name is Arash. I help people create plans to pay less in taxes. Did you know if you like, subscribe, and comment on my videos, you will automatically save 10% in taxes? Okay, that's actually not true. Also, I need to let you know that none of this video should be taken as tax advice. However, I would love to give you individualized tax advice. All you have to do is schedule a consultation on my website, link below.